Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have Todd Gordon on the line. He is a CNBC contributor and founder of Trading Analysis. Todd, how you doing this morning?
I'm doing well. How you guys doing?
Good. We're doing really good. Could you just tell us a little bit about Trading Analysis and what you provide for your customers?
Absolutely. Yeah, we're a signal and research provider. I like to focus in on kind of take a macro approach. I love watching how the four major asset classes kind of all work together. The currencies, fixed income, equity, and commodities. And right now, I think it's a great time with all the vol right now. And so we focus in on the research there. We provide signals, SMS alerts, clear-cut trade signals. I trade my live account right alongside the clients. Traded for a hedge fund in the past. I was a Wall Street guy. Now I live at home with my two kids, twin boys, who keep me up all night. And trading with no sleep is a whole new challenge, but life keeps it interesting.
Well,
right?
you turn into our show, and you can get all the after hours and pre-market movers, and you'll be prepared. And when you get,
I should just start trading London and forget that. Just sleep through the U.S. session.
All right, let's talk about the gold market here. Gold is hanging out just above the lows of the move. If you can think of a worse investment since going back here, 2012, it's probably been the gold market. What's your take on gold? You're looking for these levels to hold, and if you were going to buy gold stocks, what issues would you be interested in?
It's funny. I was about to say 1150 looks like a good short, but I guess in the last 15 minutes, that trade is played out. We've been kind of hanging around this 1150. We've just broken down trading 1143 in the front month futures. It's from my point of view, I take a little bit more, I don't know, call it intricate, kind of advanced look at technicals. I'm an Elliott and Fib guy in terms of timing the trades, and this consolidation in gold from March 11th to what we just saw is what we call a fourth wave. And I think the breakdown here is a wave 5, which means a lot of people are going to try to get on board this. And I think this is the last time to want to do it. I don't think we're going to break 1100 on this goal. You look at the dollar the last 2 days, the dollar has not followed through in the top side. In fact, we're starting to see some profit taken in the dollar ahead of the Fed. So I think gold is actually looking for a little bit of a bounce here. I'm just looking to trade the underlying. I'm not trading the stocks too much. I think we're getting plenty of volatility right there. So if anything, I would not be short here.
Okay, and XLV, is that something you think? Boy, silver. If you were following the silver market during this entire time, you probably never would have been buying gold. Silver's just never got off the mat. Do you think it's finally going to do that?
Silver is obviously going to respond a little bit better to uptrending stock market being with its industrial use. I mean, SLV holding the 15 level, where GLD also holding the 110. I mean, they're trading pretty similar right now. So I'd actually expect to see a better upside move in SLV here, because I think stocks pulled back. It was just another bear trap on the downside. We held support. Silver actually looks pretty good. I'm just looking at. I wouldn't be short here. If anything, I might even be looking to kind of sell some puts below an SLV. I mean, implied volatility is pumped up a little bit. I think we could pull some premium in there, and I just think stocks want to go higher, and silver would be a good way to play it.
Okay. All right. If people aren't talking about gold, they might be talking about the oil market and making new lows on the move here. We did get a little bounce off the 42.63 level. Are you one of those people that thinks that crude's going to $20, or you think we're going to, our last guest was looking for perhaps some stabilization between 40 and 50. What's your take on the crude market and related stocks in the sector?
Yeah, sure. Crude, I'm actually short now. Let me just see what I have a couple positions on. We booked some profits yesterday on USO. Let me just look at my positions. We have an April 1820 call spread. We sold it on March 11th for what do we do? 64 cents. We just took some half profits here at the lows. We're retesting that Feb low of about $43. I think they're going to bounce them right alongside with gold. Gold, I think, want to chase, as I said, dollar pulling back here a little bit. I think they're going to bounce them, and people are going to be trying to sell this low, I think, heading into the Fed. And I think this is not a low you want to sell. I think they're gonna squeeze them back into 45, and as people are hopefully being stopped out, we can provide some liquidity to them and offer them into 45. So again, I'm just trading the underlying, not doing so much in the stocks. I think you're getting plenty of market movement here in these and the underlying commodities themselves and the ETFs. So I'm going to hold that piece, and if I could sell more to 45, I'm going to do it.
Yeah, it's definitely, I mean, consolidation at the 50 level, then you had to break down. If you break down to 40, just from a technical perspective,
Yeah,
bouncing back up to the $50 or 45, I'm a big follower of the 50% retracement. So
absolutely.
that could be a good level. So before we came on the line, you mentioned the healthcare sector, and that has just been ripping. So let's just take a look at the ETF,
Yeah.
and then for healthcare, that's a pretty looking chart, and then move into some individual issues.
Yeah, absolutely. You know what I do is I track on the sector SPDRs. Kind of, I do a 1 week, and I'm looking at my charts. It'd be, if I sent over the chart to you, I'd probably scare everyone. A 1 week, a 1 month, a 3 month, and a 6 month percent change on the 9 major sector SPDRs, and there's two consistent performers across the top. XLV is leading on the 1 week percent change, the 1 month percent change. On the 3 month, it's actually in second place, and on the 6 month, it's leading. So healthcare is just ripping on the top side. The one behind it is XLY, which is your consumer discretionary. So with healthcare discretionary, we have industrials behind it. Really strong sector makeup on the top side. So kind of back to that idea of not getting sucked into the bear trap in the market. We have a good sector makeup. And then inside of the healthcare, a couple names I'm keeping an eye on. I mean, you can almost pick any of them. UNH just broke big time to the top side. We're opening down 60.6% here. 117.80 looks last trade. 116 looks to be support, kind of the old highs. UNH looks strong. Humana is opening down 9/10 after a huge couple days up there. 172 we're trading. I like to try to buy a pullback a little bit more towards 170, and I think these healthcare names are good names to be selling, put credit spreads on the downside. Obviously, Vol's pumped up here a little bit, and I mean, these guys, it's the healthcare, and I think it's every other sector from there.
Okay, since we are lucky enough to have you on the open here, just tell us what what you're looking at the screen. I mean, I think everyone that follows, me and Dennis on the show, we know we put a lot of emphasis on the S&P 500 futures, the activity overnight, also the highs and lows and individual issues for pre-market trading. If we were sitting at your desk right now, what would we be looking at?
Yeah, absolutely. The S&P, I sent out the members video, and the S&P is it's odd right here. The cash, just failed below 2083 from the lows on March 11th. Back into the Elliott wave world, and I know Joel said you liked it 50% of the half back. If you look at the 30-minute on the S&P cash, I mean, that's just a clean 3-wave move. And you don't need to be an Elliott wave genius to pick out 5s and 3s. And basically, if you're seeing 5s in one direction and 3s in the other direction, and I'm talking about movements, you kind of get an idea where the trend is. And as much as I said, well, all right, we pulled back the trend line support in the S&P, we just saw a nice big 3-wave move off the lows. So if you look at the retracement, Joel, your half back was at what, 2079?
Yep.
So we just held it. So I want to be bullish. I'm net long with clients. I held through the pullback. We hedged with some SPY puts. We closed the puts. I'm net long. If you break below that A wave high, which is from March 12th, that's at 2066, that's a problem. And then I think we might have some issues. But if we hold above that 2066, I'm still constructive on the upside. So for me, ahead of the Fed, kind of no man's land between 2083 and 2067. Look over at the Russell. I mean, Russell was a rock star yesterday. Small caps, I was long. I cut them, unfortunately, at the lows in the IWM. Small caps, if you're going to be long U.S. equities, here's where you want to be. Strong dollar environment. It favors domestic companies like the IWM. Kind of shook myself out, but I want to be long. But back to that point, we got to get back up through that half back level that you mentioned earlier, Joel.
And how do you interpret all this Fed stuff? I mean, I kind of like to trade before and trade after and not really during it. How do you
totally
approach
agreed.
it? Yeah, okay, go ahead.
Yeah,
Go ahead.
the Fed. I just look at bonds. Everybody's trying to call the bear market in bonds, and if you look at that chart, if you look at 30 years, we've been in an uptrend in bonds in the 30 year for 30 years. I mean, I always joke and say I'm smart enough to know I'm not smart enough to know how to pick the top of a 30-year rally. So I just kind of laugh when people say, all right, I'm shorting bonds, shorting bonds, shorting bonds. I mean, man, that's a tough trade to make. And talk about just ripping shorts apart on that squeeze back up through 159. So I just, from the bond market, I'm just the simple kind of guy reading the tape with bonds strong, with financials. Watch that XLF is starting to make way in that top 9 sector SPDR ranking. Kind of tells me the Fed, the financials are kind of suggesting we might get a rate hike, but that bond market on the long term might say we're on hold for a while. So I like you. I don't know what's going on. Stocks are in that no man's land. We're getting strong bonds, we're getting strong financials, which kind of favors a rate hike. So I'm trying to reduce positions. I took half of our profits off the table yesterday. We had a nice little run. And I'm going in with a completely open mind tomorrow. I don't know what's going to happen.
Taking a look at overall market. Is that taking a look at the overall market? Are there still any undervalued sectors out there?
What's interesting is the discretionaries, and you guys are talking a lot about them. You're talking about some of the higher beta discretionaries, business training like LinkedIn, just LinkedIn is sideways. Just looking at a couple of these other names, the action, LinkedIn's pulled back here. Let me just bring up this screen. I feel like consumer discretionary needs to get a little bit of a bid, and we haven't seen it yet. Let me just
okay, go ahead.
Come up with my list here. LinkedIn, good. Apple, I think's pulled back here a little bit. That's another big high flyer. We held support. I think Apple has the ability to start to move higher. Amazon is another one that's on the radar. So just kind of the technology stocks have taken a little bit of a backseat. Consumer discretionary technology, a little bit of a backseat. I think it's time for them to start moving higher. But right now, it's sort of about these other sectors.
And how about any like diamonds in the rough? Sectors that you've had the biotechs, your technologies. You've had a lot of big moves. Where any diamonds in the rough out there that are getting? Oil, if you want to try and step out in front of the train. Where are the diamonds in the rough in this market?
I'm such a trend trader, Joel. I definitely wouldn't say crude. I like to our prior discussion about bonds. I think the Fed is going to try to be very non-controversial tomorrow. I think rates are kind of going to be on hold for a period of time. I think we're in a somewhat strong economy coming into a good time of the year. I think the ITB. I like Lennar. I like Toll Brothers. Some of the home construction stocks, home improvements inside of the consumer discretionary is looking strong. I kind of like the housing sector here going forward. I'd like to kind of take advantage of those guys. It's definitely not a counter trend trade. The uptrend is in place, but it hasn't really accelerated like we've seen in some of the other sectors.
Okay, and do you short stocks as well as go long?
For my personal trading?
Yes.
Oh yeah. I'm a big options trader, so we're trading. We'll hold positions for a couple days. Hopefully stop ourselves out if it's a bad trade in a couple days, and if it's a good trade, be in for a week or two. But we do a lot of option selling. I do some directional stuff, some debit spreads when the chart setup is good, and a couple of the trades we have out on crude. Crude oil. Looking to take these off. We're actually short RSX, which is the Russian ETF. We've had that on for a while. I was actually short the Norwegian krone. That economy is in trouble. They're about to cut rates in 2 days, so Norway is getting crushed. So a lot of these oil-related has been pretty smooth sailing, pretty easy trades. But like I said, I think we got to start looking to take some of those off because you're not seeing the dollar follow through here on the top side, and that could be a problem for some of these falling commodities.
Is there anything that's on your short radar for today?
Today, I think we've got to watch that half back. To your point, just in the boring old S&P, that's just too coincidental that we went to the 50%. We sold off. S&P, Nasdaq is a little bit weaker than the S&P. As I said, tech isn't performing as well. So maybe the Nasdaq on the short side. I tend to I tend to just feel like volatility just escalates across everything when stocks are falling. So I'd rather just trade the indexes and keep it simple. I think bull markets are better for individual stock picking, but when everything's falling, everything falls. So you could just keep it simple and trade the indexes.
Great point. We've been on the line with Todd Gordon. He is the founder of Trading Analysis, joining us here on Benzinga's Pre-Market Prep. Todd, great information, and we hope we can have you back on again soon.
Thanks, guys. Have a great trading day. Happy St. Patrick's Day and happy Fed Day tomorrow.